Hello, everyone. I hope you had a great weekend. The stock market resumed where it ended last week with small price gains today. The NYSE was slightly down 0.29%. The S&P 500 was slightly up 0.03%. The Dow Jones Industrial Average was slightly up 0.08%. But the Nasdaq was the real leader on the day, up 0.38%, and the Russell 2000 up 0.17%. The biggest disappointment on today's session, as you can see, all the oscillators, just looking at the bottom two window panes, you can see they're good on all the indexes. But what did we get again today, which is good on the NYSE, but not good overall for the NASDAQ? Well below average volume. And I tell you what, guys, powerful uptrends. I'm sorry. I'm so sorry. I wish that I could be like, yeah, man, we're going to have a great time. First off, if anybody's new to the website, I would like you to review all my past big winners in 1999, 2000, 2001, all the way through 2008. You will notice huge percent returns in short amount of times from the exact same chart patterns we are still buying today. The only difference is that the chart patterns that form today not only don't work most of the time, unfortunately they don't produce the same amount of gains. And if you want to know why, it's because this volume relationship to the index and the way that it trades is completely out of whack. And you will see once again in August as we sold off huge volume. As we rallied from August, September, volume went the other way, a complete exact opposite of the price trend. And then as we sold off in September, what does volume do? It picks up again. Now, once again, we rally, and where does volume go? It goes in the wrong direction. So, folks, I hate to tell you this. As long as I have price and volume relationships like this, outside of day trading, I don't know what to tell you. Weight Watchers today was one that was on everyone's radar in the morning because it's another billionaire investor play, Oprah Winfrey. And once again, from just today's open, it went from $12 all the way up to $15 at one point intraday. If you're not day trading intraday, I just don't know where the money is. Here is another one that intraday we've been on. You got to look at our pre-market watch list. And if you're confused about how to trade these things in the morning, you got to come in the chat room and or ask me questions on the new positions page, and I'll tell you how to go about them. But outside of day trading, it's going to be hard to make money on end-of-day positions because the market's volume characteristics are wrong. Even on the NYSE, heavy volume on the sell-off, light volume on the rally, heavy volume on the sell-off. Good volume at the start of this rally, but now as we begin to go into the middle half of it, I guess you could see in October, all below average. Now, it's possible that what we have here is a consolidation lower volume, and we'll have higher volume on the next leg up, and I welcome that. But the Russell 2000 and NASDAQ's a little extended short term. As you can see, our oscillators are starting to get into the overbought territory, even though the RSI isn't that bad. Stochastics and the TSV and MACD, though, we're starting to get trying to work our way into overbought territory. So it's not like that we could have a whole ton of room to run, which we could, but once you get into overbought condition in a low volume market rally, you're suspect to a sell-off, so keep that in mind. But the overall good news is that today only had one sell signal, and it was a partial sell signal, EWC. It's closing below this low a day, 24.41 on the 13th at 24.37. You can get rid of all of it, however, because of how tight the price action is. I mean, when we went long this morning, we got filled at 24.55. So, I mean, we only lost, a couple of dimes on this thing. I'm going to be waiting, really, I guess, until the 20-day moving average gets eclipsed here. I know that my first sell stop is this low and the final sell stop's here, but that's just cosmetic. There's no way in hell I would ever let it go this far before getting out of the position. But as soon as it gets below the 20-day moving average, that low a day of whatever price bar goes below that will become the final sell stop on EWC. So we can hold this one for a while. But EWC was the only sell today. And besides that, we flagged a few stocks. ENLC flagged that one. Definitely not a chart pattern I'm interested in going. CONE flagged it. Not a pattern also with the volume surge I'm interested in going in this tape. MU was the best one that I'm passing on tonight. The pocket pivot point signal is nice, but volume's below average. BOP is going the wrong way, and it's not closing above 1930. I want everything to line up with the current volume uptrend that we have in this market. And so once again, it didn't, so I'm passing on that. And IRMD, this one shook me out once already, so I don't trust it at all. And looking at an arithmetic chart, that base just isn't long enough for me to trust lower volume pocket pivot point signal move, even though it's above average. It's just in the middle of a big consolidation zone, so no interest. But still, some stocks I got to flag. But it then leaves me to where we do actually have three legit signals. Unfortunately, earnings are kind of something to be concerned about with one of them. BYD is breaking out to a new high. This is a CanSlim quality stock. Pocket pivot point signal and strong volume with the surge in BOP to new highs. It was confirmed in my new 52-week highs on above average volume scan. Unfortunately, earnings are on the 22nd. So 1% position, and I don't mind. I can risk it. I really, 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 really doubt this stock gaps down below where my final sell stop is going to be at 1732. So that's going to be my final sell stop, 1732. I'm going long this stock because it does not have a history of gapping wildly following earnings. Sure, this time could be different, and I'll pay for it, but at 1% of my account capital, I'm all right. Like I said, rip-roaring bull market. I put 20% of my account capital in this position before earnings on the 22nd. I'm a gambling bastard and an idiot. Nobody should be watching these videos. However, I know what I'm doing. I've been doing this for a long time. I understand the market condition I'm in. I understand that there's times to make a ton of money when the money's in the corner, and a lot of times you have to work. This is a working market, and if you're not day trading, the small cap movers and stocks that are in play with all the day trading chat rooms, which are still a ton of gamblers out there, which means there's a ton of ways to make money out there off all the inexperienced people that are just going to lose a lot of money with all this day trading hype that still continues. Thanks to Timothy Sykes the past 2 years, which I personally appreciate. But, it's going to be tough. So BYD, I'm taking it because it's a signal on my end. You have a low account capital, high commissions, don't take it. Not worth it. Me, I put a few $1,000s into this one, pay $1 in commission. It's okay for me. So BYD, 1%. The other new long signal is better, FIX. Kind of a stinger because we were just long this. My final sell stop signal came on this day, 928. Lower volume or not, didn't matter. Closed below the August lows in an ugly tape, losing its green BOP catalyst. Had to get out of all of it. Of course, that marked the low. Intraday, it even went below the low. So if I wasn't already out of it, would have been knocked out of it intraday the next day. But now we got a pocket pivot point off 50-day moving average and ever so beautifully below average volume. But we got a surge in BOP. Very low risk entry in a very high quality stock that still is beautiful from our very first long signal, which I would still love to be long if it wasn't for the volatile tape, because if the tape wasn't so volatile, you can be sure that that would not have been the final sell stop signal, that it would have had to have been on above average volume move below the 50-day moving average, which we never did see. But it wasn't up 50% under a sell signal and a volatile tape, so I got rid of it all. Nothing I can do. But this signal, good enough. 1% position, and I'll add a little bit to it because it's basically a buyback. So it's a 1.5% long signal, so it's nothing big, but hey, it's a 1.5% signal. If volume would have spiked huge today, if BOP would have moved to max green BOP and we would have had that same price move today, yeah, absolutely, 5%. Absolutely 5%, no questions asked. 5% signal. Ripping bull market, huge volume, max green BOP spike, and this price signal off the 50-day moving average, yeah, 10%, 20%. I don't give a shit because we don't risk much if we're wrong. However, in this tape, no. Now, the best signal tonight is a recent long, DY. DY gave us a pocket pivot point signal a couple days ago right off its 50-day moving average. It's one of 18 stocks currently in the perfect speculator scan that looks at over a universe of 10,000 stocks. We're getting a second pocket pivot point signal right off the 50-day moving average on even heavier volume. So what I'm going to do is, because of how shitty most of the signals are, and this is a better one, I'm going to go ahead and make this signal the exact same amount as the previous signal and look at the last 3 days is basically a 3-day signal. And because it's perfect speculator, I just don't mind doing this. If I'm wrong, I'm wrong. I'm willing to risk the capital to try to make some money here because this is a very tough market. But 1% of account capital for being CanSlim quality, 1% account capital for being perfect speculator quality for a 2% position. First sell stop, you can use yesterday's low day, 74.51, and then final sell stop, 73.05. I will probably just be a 73.05 only final sell stop on this ad signal. But the first half of that first signal is below that level also. But on that first signal, I'll still use this level back here as the final sell stop.